The Australian dollar's been mostly stable around the 76-cent mark over the past week. August is often a quiet time in financial markets due to the northern summer, so long as there aren't shocks such as the August 2015 devaluation of China's currency. The Aussie is finding ongoing support from commodity prices. The iron ore price is holding around the $60 a tonne mark, while the price of coal used to make steel has risen to highs since early 2014. It's being helped by supply disruptions and resilient demand in China. In terms of the US dollar, there's an ongoing debate over how far the Federal Reserve will ultimately raise interest rates. While next week's payrolls report in the US will shed some light on the pricing for a rate hike in either September or December, looking beyond that, this debate over how high rates ultimately go is quite important. Before the global financial crisis, the federal funds rate was 5.25%, but its most recent forecast of where the Fed funds rate will be long term is only 3%, and that's been revised down pretty steadily over the past couple of years. This debate looks set to continue regardless of the discussion over when the Fed does move next. And because US interest rates look likely to be lower at their ultimate high point this cycle than previously thought, that's likely to work against the US dollar. There's also some debate in Australia over the Reserve Bank's long-term policy settings. The change of governor at the Reserve Bank next month, when Philip Lowe takes over, means that there will be a new agreement with the government on the RBA's targets. Of course, for the past 20 years or more, the Reserve Bank has targeted a 2 to 3% inflation rate. But with inflation running well below the target for some time, there is some debate over whether 2 to 3% is still appropriate. Most likely, the same target will be retained, but there will be discussion over whether the RBA should be perhaps reducing its target to, say, 2%, which would be in line with, for example, the European Central Bank, the Reserve Bank of New Zealand, the US Federal Reserve, and the Bank of England. Australia's data calendar becomes busier in the week ahead. We will see July readings on building approvals and retail sales, and also the important second quarter business investment survey. That will provide us further insight into second quarter GDP, which is due in early September. After the construction work survey a few days ago, are growing downside risks to GDP. The Business Investment Survey also provides an update on investment plans for the year ahead. Mining investment is likely to remain under pressure for some time, but the key question is whether non-mining sectors will become more optimistic in their investment plans. All of this is likely to leave the Australian dollar in pretty familiar ranges. In the week ahead, we're looking for the Aussie to trade, say, a 75.5 cent range to about 77.5 on the top side. We'll speak to you next week.